What's up everybody? Welcome to the Stocks channel. My name is Corey and today we see a continuation of the pullback with a very volatile sell-off across the board. Is it time to buy the dip or are we going much lower? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we finally see a continuation of that pullback after this monster bull rally that just looked like it was defying gravity. Remember, nothing can go up in a straight line forever, so we were definitely due for this pullback and we have been expecting it for a few days now. So now that we're past this date on October 9th, remember that everything to the right of this means the market could be experiencing some weakness. That doesn't mean we can't go higher because we're still going to see volatility. And as we know, volatility does work in both directions, so you still need to watch out for whipsaws. If you're trying to chase every move lower with puts, you're going to get whipsawed when the market bounces, and if you're switching back over to calls, you're going to get whipsawed yet again when the market pulls back. So expect a very volatile market because we do have that elevated VIX, and we know that does mean there's elevated volatility. Now, the one thing to remember about this market is that it's a very strong bull market. We didn't get this high and we didn't go that far that fast without this being a very strong bull market. So we still do have the benefit of a very strong bull trend. When you have a very strong bull trend, it's a buy the dip market until you lose a critical support level or you lose the bullish trend. So by far the most critical support levels on SPY will be right around 460 to 457. And we do have this very aggressively upward sloping 20 simple moving average, which is going to be a very critical support level as long as we're in the strong bull trend. So as we know, that 20 simple moving average continues to rise each and every day. So that will strengthen this support level right around 460. Each and every day we go sideways, we'll still have that 20 simple moving average going higher. So we will get more critical support the longer the market hangs around this range. So yes, I do think it is a buy the dip market and the strongest support levels on SPY are going to be 460 and 457. If we lose those levels, you're looking for a test of the previous all-time high at 453. And if we lose that level, you're looking for a test of the 50 EMA, which is right around 450. And there also is a gap close at that level. I don't necessarily expect to go down to the 50 EMA, but it's always a possibility if we lose that support level at the 20 simple moving average. So watch this strong support zone, and you do have three very critical support levels to pay attention to. But also don't rule out the possibility that this was the pullback and we're going to start chopping around and just going sideways. There's always the possibility of a bull flag when you're in a bull market, and a bull flag will basically just eat time off the clock and it'll wear out the bears and the bulls as the market just grinds sideways. And that is still a possibility as we head into OPX, which is on November 19th. So don't rule out this possibility of a bull flag, and this will be a nice trading range, but it also will be a whipsaw if you keep switching directions. So in a bull market, I always suggest taking the long trade and buying off support. But if you are shorting in this bull market, make sure you take your profits quickly because we are very likely going to eventually break out and get to those new all-time highs for the Santa Claus rally. Remember, we have price targets higher, and on macro trends, it does look like SPX is going to 4,800 and plus. So don't get bearish just because we're pulling back. Use it as a buying opportunity if you miss this very impulsive bull rally. To the upside, look for resistance at 465, 468, and 471. And we need to break out to a brand new all-time high to prove this pullback is over. We went way too far, way too fast, so we don't have any critical resistance levels to pay attention to unless we start chopping around and going sideways and we start to build up a wedge. It's way too soon to know exactly what's going to happen, so as I always tell you, watch the price action, and there's no substitute for watching price action. We can speculate all day long, but at the end of the day, you have to watch the price action and you have to put in that work. Also note that we didn't go down on increasing volume, so we're really not getting an elevator down. We're seeing selling, but we're not seeing panic selling, and I will caveat that with saying yet. We're not seeing panic selling yet, even though it's always a possibility panic selling picks up. We're simply just not seeing it yet. So in a bull market, you want to buy the dip when you're going down on lower volume, and you want to wait for critical support levels. Jumping over to the NASDAQ 100 triple Qs, we were down almost 1.5% today, and we did hit a very critical support level right around 388. Remember, that was one of the critical levels I told you to pay attention to last night, and we did bounce off that level intraday. However, the 20 simple moving average is still down here right around 384, so we could still go a little bit lower, and that would be a very strong support level. If we lose support at 384 and drop below 383, that means we're very likely coming down to the 50 EMA, which is going to be right around 377. I don't expect to go to the 50 EMA, but you can't rule out the possibility if we do break down below the 20 simple moving average. So the possibility of bouncing off 388 is still there because that is a critical support. And you can see that we did go lower on relatively increasing volume, but we still don't have those huge volume spikes that we were seeing in September just yet. Everything's subject to change, but with a strong bull trend, you still want to stay bullish. To the upside, look for resistance at 394, 398.7, and 401, which is our previous all-time high. Above that, we're going to break out and start running to our next price target just below 410. So watch critical support at 388 and 384. If we break below 384, we're more than likely going to 377. On the Dow Jones, we were down 0.61% today, and we see the Dow Jones did close below the 5 EMA, and we're still above that critical support at 360, and our 20 simple moving average is at 358. So we really don't have a lot of downside left in the Dow Jones before we're at very critical support, so don't expect to see very much more pullback in the Dow. We're more than likely going to bounce off of one of these critical levels at 360, 358, or 356.5, so watch those levels closely. If we break below those support levels, the 50 EMA will be right around 354. And again, I don't expect to go there, but if we do, that will be a strong support level. As long as we have the bull trend, look to buy off support levels as long as they're holding up and we're seeing price action bouncing off. The previous all-time high resistance is just above 365, and we need to break that level to get to the next price target at 372. On the Russell 2000, we were down 1.58% today, and we're finally starting to see the Russell 2000 pulling back after this very strong bull rally. Remember, this was a breakout to new all-time highs on the Russell 2000 that's gone absolutely nowhere since February of this year. So in a long consolidation, you're looking for a very impulsive breakout, and that's exactly what we saw. So I'm looking for the Russell 2000 to continue this bull trend, which as we can tell is still a very strong bull trend. It's just going to need to find where support is before it starts to bounce, and I do expect it to break out to another brand new all-time high. So look for support right around this 237 zone all the way down to about 234 or 232 where our 20 simple moving average is. Remember, each and every day that 20 simple moving average continues to go higher. So if we don't get to 232 tomorrow, it's only going to make that support level at 234 even stronger. And again, each and every day that support level continues to rise. So the 13 EMA is right around 235 and we have strong support right around 234. So those could be great levels to buy the dip if you get the opportunity. Otherwise, we're going to start bouncing from here as soon as tomorrow and start heading back up to that price target at 245. On the way there, we could still experience resistance right around 238.5, so watch that level as well. On the Arkk ETF, we were down 3.34% today, and it does look like we closed below that critical support level, which was our 50 EMA, which was sitting right around 119. Now we're still holding up above our support level right around 115.5, and remember we are looking for an inverse head and shoulders here, and it does look like we're starting to put in that right shoulder. So when you get an inverse head and shoulders, you're going to eventually break that neckline if it's a confirmed pattern, which means we need to break out above 126. However, we can't look too far ahead, and right now we're at the bottom of the shoulder, so we need to find out where we're going to bottom out before we start to see that bounce if we are going to see this inverse head and shoulders. So look for support at 115.5 and the full gap close right around 113. And if we break below 113, we'll need to hold up above the support level right around 107, or we will very likely invalidate this inverse head and shoulders, which is a bullish pattern. We're losing the bull trend today, so we do need to confirm bullish price action by bouncing off support and forming another higher low. Remember, the previous low was 107, so anything higher than 107 could still be a right shoulder, and then we will look for that neckline breakout at 126 to confirm that we're running to the price target at 143. So I'm bullish on Arkk as long as we can confirm this inverse head and shoulders, but the confirmation won't be until we break out above 126, so don't look too far ahead, you still need to take it day by day. On the VIX, we were up 5.35% today, and I did tell you to expect to see the VIX spiking during this pullback, and that's exactly what we're seeing. Watch that critical level at 20 because as long as we stay below that level, you will want to buy the dip. If the VIX starts spiking out and closing above 20, now you need to be a lot more cautious of a deeper pullback that could turn into a stock market correction. We do have a very small gap on the VIX up here right around 21, so we could wick into that, close the gap, and then still close below 20, and that still would be bullish price action for the VIX. If we close that gap and continue to run higher, look out for a much deeper pullback than what I initially expected. Right now, the VIX is still heading lower and we're forming another lower high. So again, I still think it's a buy the dip scenario as long as the VIX is not closing above 20. On Bitcoin, we're currently down almost 3% and we're closing right on top of this 5 EMA, and we do have the full bull trend. We already had the confirmation breakout on increasing volume to a brand new all-time high, so this isn't something I'm overly concerned about. As long as the price action stays above about 62,000, you will want to buy the dip because Bitcoin is very likely going to $75,000 next. If we break out above 75,000, my next price target is 86,500, and that should be a very strong resistance level. However, right now we are pulling back, so we need to acknowledge that, and we only closed above the previous all-time high for one day, so we would like to see a bounce and another close above that level, and then you will want to buy the breakout for the run to 75,000. If we break down below 62,000, watch critical support at 59,000, and below 59,000, we're more than likely going into a deeper sideways consolidation. I don't expect to see that because Bitcoin is still looking bullish, so prepare to buy the dip and get ready for that breakout because that's the highest probability chance. On Amazon stock, we were down 2.63% today as we see Amazon struggling at our resistance trend line, and it just can't seem to break out and close above 35.80. That's our resistance level we need to break to get to our next price targets at 36.28 and 3700, and right now we continue to get rejected at that level. We're back below some other resistance levels that will now need to break back above, which are at 3500 and 3552. To the downside, we still have a full bull trend and support at 3450 and 3400, so you will want to buy the dip as long as we have the bull trend. If we break back down below 3400, you need to get a little more cautious because we could be coming back down to 3300 or 3185. I don't think we'll go that low unless we break below 3400, so watch that critical support level. On Tesla stock, we were up 4.34% today, and we did get a confirmation bounce off our positive sloping 20 simple moving average, which really shouldn't be a big surprise because we have a very strong bull trend, and we did have very strong bullish price action going into this dip. So remember, it's still the possibility this is a blow off top, and we will come down to close that gap at 911, but each and every day that goes by, our 50 EMA is crossing through that gap, which decreases the probability we need to go close that gap because we'll have critical support above that level. So right now, still watch that 20 simple moving average, which continues to rise. So our critical support on Tesla is now at 1033. We still have resistance at 1080, and we will need to break above that level to go close the gap above right around 1207. Remember, we have two gaps to close, one's above and one's below, and it's the battle of the gaps. But when you have a full bull trend, you have to give benefit of the doubt to the bulls. We went higher on very nice volume, so it's very likely if we break out above 1080, we could start to run to 1207 to close that gap, and we could test the previous all-time high at 1240. If we break out above 1240, you know our next price target is up here at 1412, but don't look too far ahead. If we close that gap and we continue to head lower, we could still put in a bull flag before we break out and go to those new all-time highs, and that could take us out to the year end, and we could just grind sideways for a while. That wouldn't necessarily be a bad thing because anytime you form a bull flag, it allows for consolidation and build up energy for that next monster move, which should allow Tesla to get to 1400. So no matter how this plays out, you need to watch the price action, and you really just need to put in the work to know exactly how to play this stock. If we break down below 1030, you're very likely going down to the 50 EMA, which is now right around 920. And if you break out above 1080, look for the gap close at 1207. Those are the lines in the sand, and that's how you need to play Tesla stock. Otherwise, just leave it alone and wait until it consolidates and you get a much cleaner picture. It's a very volatile stock, and it's going to swing wildly in both directions, and you need to follow those critical breakout levels or you're always going to be on the wrong side of the trade. On Apple stock, we were down 1.92% today, and we're getting very close to our critical support level at the 50 EMA, which is right around 147. We still have the full bull trend, so it's not too late to get a strong bounce and still maintain the bull trend. If Apple gets down to 147 and sees a strong bounce, we will have to break out back above 151 and the breakout level at 152. If we can break out and close above 152, we're very likely going to see Apple going to a brand new all-time high. On the way there, we will need to break out above 157 with the price target at 162. If we break down below 147, we will lose the bull trend and Apple will be looking a lot weaker. So 147 is the very critical support for Apple stock, and if we bounce off that level, you more than likely will want to buy the dip. If we close below that level, you'll want to look out below because we could be coming back down to 145 and 142. And if we break those levels, we could close the gap at 137. We still have the full bull trend and we're still above critical support. So we want to give all of the benefit of the doubt to the bulls, and we still want to favor a strong bounce off of this level until the price action proves otherwise. On the financial sector, we were down 0.17% today, and we're starting to lose the bull trend, and the price action is below support. It's not too late to regain the bull trend if the price action can start bouncing soon. Otherwise, look for a retest of that 50 EMA. The industrial sector was down right around 0.5% today, and we still have the bullish price action with the very strong bull trend. The healthcare sector was up 0.29% today with bullish price action and bullish trend. The energy sector was down 2.64% today, and it did slice right through support, and we're starting to lose the bull trend. However, this still looks like a bull flag look, and we could regain the bull trend if we start to bounce from here. Otherwise, look for a retest of that 50 EMA. So jumping back over the S&P 500, this is definitely the territory where you need to be a lot more defensive and a lot more cautious. It's still a buy the dip market, so don't be scared to buy. Just make sure you have a strategy and you know your exit plan if things start to go against the trade. Right now, watch these critical support levels, and as long as we're above those levels with a bull trend, you will want to stay bullish. If you follow this channel for any amount of time, you know that we are consistently on the right side of the trade, and that's because we stay objective. If it quacks like a duck and it looks like a duck, we just call it a duck and we don't try to over speculate. So looking at this market, it is still a bull market. There's no reason to believe otherwise until we see something shifting in the trend or the price action. So buy the dip responsibly and make sure you're watching price action, because if something goes against the trade, you're going to see it in the price action. This is a very strong bull market and it's not likely going to die easily, so don't just assume it's going to roll over and die just because we're getting a pullback. Remember, we expected this pullback, it's a healthy pullback, and all bull markets have them. You need to pull back when you have a parabolic move to the upside, and that's how you reset the technicals, get rid of some of that greed, and allow the market to continue to make that next leg higher. So stay bullish as long as we're in a bull market, and don't let fear mongering scare you out of buying the dip. There's a lot of you out there that continue to miss these bull rallies because you constantly have negative thoughts that are stopping you from remaining objective. Unsubscribe from fear mongering and stay objective. Also remember, I have my own trade alert service called Bank Trade Alerts that only trades TQQQs, and I'm currently running a 50% off promotion code for your first month. With this recent pullback in volatility, I think now is the best time to be a bank member, so if you're interested in joining, you can find out all the details in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis, and also bring new trade ideas to you weekly. We're absolutely crushing this market on the Discord server, so if you're interested in joining the Stocks Channel community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.